It's Matt Simpson here from Forex.com, and today I'm looking at gold and why I think it's looking at a pullback, at least over the near term. Now, the bigger question is whether we'll see a deeper pullback or whether bulls will step in to support the market. I'm leaning towards the latter, looking at positioning on futures traders and clues from the options market. So let's take a look as to why. So on the left-hand side at the top, we've got the gold weekly futures chart, and beneath here we've got futures positioning data. The green line representing gross longs, red is gross short, and the blue one is net long or short exposure. Now, traders have remained net long for quite some time, but that net long exposure topped back in September 2024. Interestingly, it was trending lower whilst prices went into this parabolic move. But if we skip forward to the last 2 weeks in particular, there's been quite a drop off of that net long exposure, and that's because gross longs have been closing out. What's interesting about that is that whilst shorts have picked up marginally, they've not picked up a lot. So that's telling me that it's gross longs capitulating, and it's not necessarily a bet against the gold market. It's just that bulls kind of think they might have pushed their luck a little bit too far. So that's part of the reason why I think the pullback on gold might be limited, because there's nobody really betting against it on the futures market yet. Also keep in mind that we had a $1,200 sell-off on this 2 week period. That was actually 3 days. So $1,200 over 3 days is quite a significant drop off. And what tends to happen when you see such sell-offs is it enters generally what I call a shell shock stage. And that's where volatility can diminish to the point of it being quite low, usually in the lower half of that range. And that means I think it's unlikely at this stage that we'll be seeing an immediate break beneath this low or an immediate break above that high. But I am leaning towards a pullback within the lower half of that range. Now, interestingly, on the right-hand side, we are looking at options data, or specifically risk reversals for gold. Way to read this is if the number is negative, it means there is greater put demand for calls, and if it is increasingly negative, it means the demand for calls is picking up at a faster pace relative to calls. And you can see that over 3 time frames here, the blue one being the 1 month, and we've also got a 1 week on the red line, which looks at more tail risk. They're pointing lower in negative. So that means that options traders suspect there might be a bit of a pullback over the near term. But if we look at the 1 month out, it still remains positive just about. So that's part of the reason why I'm thinking that we could be looking at a bit of a pullback, but not a massive rollover at this stage. But let's look at a little closer look at the technicals. Now, this is the daily chart, and you can see that how we went into parabolic phase here. There's your $1,200 sell-off. And there were some very strong bearish volumes at that high and on that sell-off as well. Now, interestingly, since we've seen prices rise higher, it's come in 3 waves and volume has been declining. Now, that can usually mean either you're looking at a corrective move, A, B, C, or maybe this is the beginning of the next movement higher, because keeping in mind we've had a very volatile shakeout. Traders have had their fingers burnt a little bit skeptically back in the market. That could explain the lower volume. However, what's really caught my eye is that we've got volatility, which the daily volatility is expressed by this percentage daily range bar. That's been declining alongside volume. So volatility is diminishing whilst prices rise on thinner volume. So it's not a convincing play here from the bullish camp at all. But notice how when it came back to these highs, it struggled. We had a bit of a sell-off yesterday, and prices now retracing within yesterday's candle. So my near-term bias at the moment is if prices remain beneath this swing high, bears might look to fade into this move for movement down to 4,800, a break beneath which, looking at round numbers at this stage, maybe 4,700, maybe that December high around 4,620. But keeping in mind that this is longs closing out that have got us here, not bearish initiation. And whilst options markets are looking for a movement lower, they're really pricing in that potential for the next week, not the next month. So I think bears might have the upper hand over the near term for a bit of a pullback, and further out, I do think bulls will be looking for such discounts for a dip to come back into the market. At the same time, though, I'm not expecting this market to simply rally up to new highs and continue that phase, because we're still probably in that bit of a shell shock phase. So near-term pullback, probably a bit of a dip, but for now, and in the coming weeks, probably going to remain ranging in these that $1,200 range. As always, hope that's useful. Wish you best of luck with your trading.